You feel me? We live on this thing. Wednesday, baby, at South Factory. Let's get it. Yeah, so picking up from our offline conversation, you know, trading psychology, identifying the proper trades for you, identifying how much money in the market, identifying the good and bad trades. So we're looking at the NQ right now. So peep this, right? You see how the market been in consolidation? Same thing here. So last night, I was talking about the last hour close, right, of the previous day. We just run this across. Boom. Drop that. That's yesterday close. So remember when I told y'all last night, price consolidated the whole entire time, popped up, then it came right back, right? But price trading below here. Today, me personally, NQ really had this the best trade off of it. So you need a retracement. What I like to do is catch that little pivot point. This would have dropped at. Boom. And I'm gonna run my field from the previous high to the current low when I'm coming into the new market. And I'm waiting for price to retrace up. Like I'm looking for a price to come up here, right? And do this, or come up here in this ballpark and do this, right? I'm looking for it to kind of get down here. Let's get off that. Because you gotta look at it. When price do not make a decent retracement, you don't understand how much the trade is really worth. If it only doing these 38s, 23s, you're like, okay, how much they really worth? So I like to measure these out. I'm saying if it did a 38% retracement to here, okay, that's 1,000 ticks, 1,200 ticks, right? To here, that's 2,000 ticks. Great. But I want to see a fantastic pullback, rebalance price in these areas like you see, right? I'm like, okay, cool. We got 700 ticks to the 61% retracement. We got 394 ticks to the 50% retracement. So I'm looking for these things overnight to take place. From there, if it's going to continue to downtrend, I'm going to cherry pick my entries at these levels. I'm lining it up with price action, right? I'm going to say, well, we got a fair value gap right here. Boom. I'm lining it up, right? Then I said, okay, we got a little something, another one little right there at the 50%. So I'm gonna see if they're gonna give me that. If we got news events, well, you be mindful of that too, right? So when you come into the market, let's see how much the money, how much money on the table here. If it's not a lot, then you can easily determine like, do I even want to participate? If it's not gonna give me this setup or this setup, the 50% or the 61 back into this fair value gap on a higher time frame. Will it give me that? Maybe yes, maybe no. Now we did get this volume imbalance hit between the 38 and the 23, right? So let's drop down to like an intraday time frame. I know a lot of people use this 15 minutes, so we're gonna slide down there real quick. Now we looking. There we go, right? So you had a nice little fair value gap right here on the 15-minute. That's what price traded up to. All right. So that was a reason. And you got another order block here. So what I'm doing is when I come to the market again the next morning, getting prepared. Oh, wrong template. I'm looking at places in the price chain where I can see where price can actually go reject from the whole nine. So you had an order block with a fair value gap, which is a strong combination, and then you got this little rejection block here. Anytime you see, let's zoom in because we got zoom action. Boom. See these pair of candles right here? Boom, boom. Yeah, that's a strong little zone of rejection. I love these candles. This whole little thing is a nice little block, but you can go here, boom. Then you can also highlight this little 3 candlestick order block continuation. 1, 2, 3. You feel me? So you got this one and this one. Then you had this gap. There's a lot of work here. So anywhere in this chain, you had a form of rejection, right? If anything, we can say, okay, cool. From the higher time frame, that's that pivot. I'm looking for price to stop here. So now I know for sure where price can possibly return to, right? When I find stuff like this, now I'm going to shorten my range up because I'm not expecting it to go that high. If it do, great. If not, I'm still going to be looking to take action in any one of these stops. I don't know where price. I don't have a crystal ball. They don't exist. They don't sell them at Costco's or Temu. So you got to do your due diligence, right? I'm gonna go on ahead and run my field from this pivot point here to this low. As you see, this is the Asian market low. Great. Now you just wait for price to trade up in that, right? There's your 61% retracement. Okay, bam, slap. From there, we're gonna determine what setup is this, right? You can take that and say, all right, cool. Stop loss really need to be at the 100. Well, that's a pretty large stop loss. So what need to happen is I need to shorten up my entry, right? Another way of doing that is putting a fib on your fair value gap. Since it's a bearish gap, I'm gonna start from the top down. Okay, let me get rid of this fib. We already know what time that is. Okay, a little jumbled. Let's blow it up. This is one of my little tricks I like to do. Fib it up because now you got your 618, all that good stuff, and you clearly got your targets, right? So as you see, you can say, all right, cool. I can set my entry to the 61% of this field. I got the order block, so I just need to be outside this order block. And I can start pulling it down. If you say, well, 200 ticks too much, too rich for my blood, because what happened, they actually went 107 ticks, you should go down to a lower time frame and wait, or go down to a lower time frame and find a cleaner entry. So I guarantee you, if we come here, hit the replay button. You can also do this during the live market. It'll help you cut off the necessary candles because this is where the action taking place in these 3 rows of candles, right? So we need to find that turn on a dime candle, what time frame that was, and when did it happen. So let me drop down to a 3-minute real quick, and I'm gonna be looking SOS, right? So now I'm just kind of reading the candles here. I don't see nothing too special that I can zoom in on. Doo doo. So we got a little volume there. Then we got a little gap here. So we got that little gap right there. Okay, cool. Then you got a little volume imbalance right there. Right. Boom, boom, boom. Now, when I'm looking at this little gap, I want to look to the left to see what took place. Did this thing displace any price action, anything like that to make this very significant? So I need to zoom out, go to the left. Actually, let me get to a higher time frame real quick, get some candles off. There we go. What is possibly over here? Okay, so this is our low. So that's the break right there. Boom. This where that candle pivoted at, right? Or where it stopped, pretty much it stopped. So right here, that's the break of that last previous low. So that was your breaker structure on this blue line here. So we already know what time this is. And you look at it, right? It should move the entry right there. That's pretty much where they actually targeted. Let's go down to a 5-minute chart. I want to see what that price action looking like. And this is all I do. I'm trying to go down to lower time frames as possible, find out where is my turn on the dime candlestick at, and how can I take advantage of it. I'm gonna get down to a 1 minute. I am going down to the one. I'm just sifting through because you got time. When you waiting, you got time. Trust me. All right, so we have another volume imbalance here. So can we tighten this up? The whole goal is to tighten up the range and see how cheap can you make it. Oh, that's also a doji. So, just keep going. Like, okay, get more reasonable. And that's it. That's all I'm focused on doing is how tight can I get this? Oh, you did? Okay, that's nice, Melinda. And you see, watch this. You just get the same candlestick patterns on these lower time frames. So you see how they came up, boom, rejection. So that's another little block on the lower time frames, people are trading to. See, that's how they got it right here. Boom. And then that kind of helped you get in line with the larger time frame because it's 1 minute block, 1 minute order block, 1 minute fair value gap, 3 minute fair value gap. It lines up with the 5 minute, 15 minute, 1 hour, the whole nine, right? So when we done with this and we're gonna go back to live, boop, boop, boop. Let's get up to 6 minute real quick. And we get back over here. Now we can kind of see the zone a little bit tighter now, right? Is that necessary? No. Me personally, you can just wait and see what happens. You want to just wait for a counter rejection. And then you say, all right, cool. Let me just go ahead, enter like this. Let me just know for sure they're going to reject here, right? And you're going to start measuring out your stops or use this as your entry. Still, you had a second chance opportunity when price rejected, went up, boom, rejected, consolidated, came back up, rejected again. And that's how you knew you can safely take that trade down, right? And if you wanted to, you can target the swing, last swing low, whatever they got there, right? And it was 413 ticks. I know good and well, most traders shooting for 100, 200 ticks, whatever they looking for with size. You're a very nice day. But 400 tick, 500 tick trades are possible if you can see where they located at. Especially time of day. This happened at noon. Volume kind of dips down at noon. So you would have took the retracement back into this point and traded up to that level. Say, all right, look, this the previous day close. The moment price get over that, I'm going long on breakouts. I'm just going to watch, wait for a nice little strong close above, and I'm going to go take breakout trades to these zones, right? Or into these little pivot points. Still 300 ticks. You could have went long on this. Maybe yes, maybe no. I don't like the counter trend trade, so I would have been waiting for shorts. That's an easier setup. You don't have to worry about getting stopped out, or you don't really have to worry about, all the choppiness because you see this, they was fighting. The news helped them do all of this. So you don't want to be chopped up. You don't want to be fighting for ticks, none of the whole nine. But these are two chance opportunities. You had the initial test of the zone over here, right? Boom. Then from here, you had the retest. Price came down, retest. So you would have took it. It's still a great trade down. They pull back up to the same entry, then gave you that trade 2 times. So you could have maximized this if you was there and available. You could have took 800 ticks off the table today just by taking profits, re-entering, taking profits again. If you wanted to kind of target, once again, read your price action, use your candlesticks. Boom, boom, boom. Nice little volume imbalance right there. You could have traded into that, right? You could have said, well, I'm going to stop right before the balance, right before this imbalance. I'm going to stop, right? I want them to get right there. I say 300 flat. I like whole numbers, right? Remember, be a pig, never a hog. Pigs get fat, hogs get slaughtered. And this is a late entry, by the way. So you getting the whole rejection candle. You could have took this down until this point right before they got there and exited, right? You got a lot of force, boom, and then you seen a consolidation. Now you have a reason why they go up. Because that's why they retest. Then once you seen them come break back down again, because you have another why, you could have took this trade twice. So let's go on here and clone that, right? Because we are smart and we like to take advantage of good things. And you're gonna wear them out. You're gonna say, man, I'm trade back down to that level. You can either trade down to the low because now you know how low they're gonna get. So you can get like right to the low, double dip on them. It's totally up to you and your discretion, and you like to trade this NQ stuff. Any questions about the NQ, Melina? Dope, dope. Because all it really did was come up, get this liquidity this morning, and they still closing below the Tuesday close. You look at it, right? Remember, this that close I marked out. Where they at? They just kind of bounced above. Because whoever went short here, they took them out. So there's your little pivot point there, because whoever took that pivot, boom, dude, get your little break of structure. They swept that. It's a little liquidity run real fast, rebalance price, and then they tanked. Nothing special. It's SOS, same old price action. You feel me? Dip down, let me rebalance. Don't dip some more. And now, probably tomorrow or maybe Friday, they're gonna try to sweep these lows they got down here. In theory, the market is not looking good. They got all these little reports dropping, all people trying to discount price. So looking at the news events, you're gonna have panic sellers in the market, and they're gonna be looking to sell off. So you can take advantage of these Tuesday lows. I got a marker for that. You can take advantage, and you can possibly get some nice wins, right? Or take advantage of your previous swings. So okay, cool. It's a peak formation. It came down. Whoop, boom. Now they kind of starting to do this little funky pattern, right? And you can look for them to sweep that low. If they're gonna come down again, if they make equal lows here, then we'll probably get a reversal. But if not, hey, we're looking smooth. But what am seeing is we got support building, right? You see how they came down? They failed to shift down more and make a new low. So we have a shift right here. Now price is retesting that level. So could we bounce from here? Maybe yes, maybe no, because they should have been shifting down. We got to see how this is going to play out, right? If they do decide to bounce, is our double top, resistance. Boom, boom, boom. Break out. And then clone that. Break out. This is a 6-minute chart, so you can also see it on a 5-minute chart. I just use these different time frames, right? So let me just mark that up real quick. Got the V-shaped joint. That's our target. Okay. Measure move. Oh. Now I'm gonna look at where we came from and see reason why they'll probably want to come up here, right? Got this nice little volume balance they've been wearing out, they've been rocking with, and then you got this consolidation point. So 9-10, this is demand zone here. They all want something up out of there, right? If not, you don't care about those blocks, just run the field. We're like, all right, I'm gonna run this field. Pivot point high to pivot point low. And now I'm gonna let the chart show. Okay. From the high to the low, from the window to the wall, to the chart drop down and fall. All these ticks come down. Can't, this is going live, so I can't say what I want to say. Y'all know what I'm talking about now. All right. So looking at it, you got to retrace them back up to the 78. Previous resistance was the 61, and it said leg of the trend, right? If they decide to take that out, could we go back to the highs, revisit rebalance price up there that haven't been tapped into yet? Don't know. We're going to find out. But simple things like that, understanding how much these moves are worth, you can save you a lot of time and say, well, if I play the breakout from point A to point B, I can possibly get 200 ticks, 219. I don't want all of it because the possibility it may not go there. So I never want to be a hog. I just want to get some. I just want to be a little of a pig, but never a hog. That way I can get what I need to get out the way, and live to see another day. Okay. So that is the NQ. Let me slide over to that ES. Any questions on the NQ before I slide over to the CL? I guess we smooth. Let's get over there. Already, baby. Already. Now, what I'm liking about this CL though, see, this was the reason, this originally why I'm here. So just marking out the close, like today, they did something crazy today. Yeah, right. All the ticks fall. Just marking off the daily closes, you'll see what I'm talking about with the CL. It's getting real predictable per se, right? These are the daily close candles, last hour close candles, right? Actually, let me boom. Just watching it, tracking it, waiting for the little consolidation. So what I want with CL is a nice consolidation breakout through the London market. Do, 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 do. Boom. And you're getting these little breaks. Today it did something funny. So throughout the London and the Asian market, it broke down, then flipped back up at 6 a.m. and then decided to start dumping for the rest of the day, making a new low, right? Do, do. It was acting real different. That's all I'm gonna say. It was acting real different, putting in this new low. It was definitely not a smooth transition. It was a little choppy. I was looking for them to probably find some support somewhere. This counter right here. Oh man. Go down to this 12-minute chart real quick. So from this block, right, you had this original rejection block here. Price came down from, right? Boom. We took that 45 ticks back down here, right? 171 ticks, right? So watch this reversal. So from here, back up. This thing made 138 tick reversal back to the upside, back inside of this candlestick. Small little gap, right? Back inside of there. Reject. I mean, reject. Then they say, oh, we ain't done. Spin a block again. So let's say you would have, you could have took that entry right there. And then they slid down for another 183 ticks. They was acting besides themselves. I don't know what's going on. Why they trying to discount this all so much, but they acting crazy. They normally don't do all of this. But you trading crude oil today, you lit. You lit. You go ahead and forward them horns on your front of your Cadillac. You feel me? Yeah, bro. Yeah. You gotta go. You gotta ask for that custom. Get that Fleetwood with the horns in front. Uh-huh. Yeah. That's how the Bushes do it. Yeah. Yeah, you know what I'm talking about, Lee. Yeah, you from the South. You seen him. That's how they know you mean business. But great trading opportunities. I like crude oil because it gives you great trading opportunities. You're gonna get like 1, 2 entries a day, like here with this little pivot. And I keep telling y'all about these little blocks. You simply just go at it like that. These little 2 candlestick blocks. Great trade opportunities. Price probably come back up there later on. But when they put those in, you kind of good to go. You can just either wait for this to close, get in on the 3 candlestick order block continuation, whatever you want to do. But these are great entries, especially after come out of some consolidation, pivot, and then dump. I always like wearing those out. Always mark your last hour close because price will form the new day around that, right? The New York close, as you see, boom, boom, price channels around that, especially on CL. On gold, it do it too. It'll kind of like bounce around, and then from there they'll kind of expand into a range expansion outside of that last hour close, right? Let's go back up to the hour, and I'm gonna show y'all this sniffling and stuff. Weather change. Boop boop. Ba-dum, ba-dum, ba-da-dum, bum, ba-dum, ba-dum. Buster, what it is right now. All right. So same thing here, right? Boom. The highlighted. No. Last hour close, price consolidated, breakdown. So once you seen it close below the previous day close, yeah, that's on top of my lead. You found it. Yeah. It's gonna break down. Same thing here, right? Last hour close of the previous day. Price did what? It channels around that level. So this is the make or break level for the bulls or the bear side of the market. We already knew all been pushing down and been in a heavy downtrend. So you best to be taking sales. You can if you want to get the pullbacks, they giving up the ticks. But once again, counter trending trades, it can lead to a little bit of whatever. But yeah, man, let's focus on that last hour close. Previous day, mark it up. That's one quick line across from the start to the end of the market. And watch how price form around this. Watch how price dance around and then take off. Watch how price dance around, then take off to the upside or downside. But yeah, I ain't gonna hold y'all too much. That's that piece. Any questions? So we can get down ahead and get y'all back to y'all day. Yes, no, maybe so. Oh yeah, yeah, yeah. Before we go, with the SPY. Shout out to Freeman. He on these charts. Let's get up to that weekly though. Boop boop. Was talking about this prior. It's a nice little double top pattern on the SPY. You better work. Well, then we got our support level. This is where I pivot at. All right. They want to measure it out. Support to resistance. I don't know if they're gonna give all of that, but it is what it is. No. So people who don't know patterns, this is what a double top look like. All right. There you go. Little cricket. But yeah, looking at a $53 move on this. Mm, yeah. So if not like D boy say y'all can call it a M. Yeah, I want to see it. It got to get down to this 510 though. This 510.46 for the breakout. If it don't break out, it ain't double top, people. There's FY. It's not a pattern until it breaks out. It can be forming a pattern, but it's not a pattern until it breaks out. So far as is looking, it's form one, but until you're down here and break out, it's not one. Okay. It can still come down here somewhere, right? This chart can still just say, all right, I'm gonna come back down here where they bounced at the first time and then go off and make new highs. They can still do that all day. So it's not a pattern until it breaks out. I've seen a lot of times traders put their money on the line trying to play these patterns. They taking a trade way up here. They get down here still holding, adding more. And then once it start reversing, they looking crazy because they will get knocked out. Just be patient. You can trade it down, but if you're gonna trade the pattern, you need to make sure this position is actually gonna break out. You can re-enter a trade. You can always trade down the moment you start finding support, get out, take profits, look for a new entry. Man, I'm trying to tell you, boy, that failure swing something else, boy. It had you sitting there crying in the car when that price decided to get up out of there. Cause you saying, oh man, I can get it at the top. If I get you think about it right now, right? You're gonna do it just like this. You're gonna put your little price measurement tool on there. So man, it's 30 something dollars away from the neckline, the breakout level. But if I hold, I can get a $92 move. Oh man. Then you start counting the coins in your pocket, start doing the calculations on the data and stuff like that. Yeah. Yeah. You start talking about which Bentley you can pull off the lot. Oh, that Lamborghini, that trip you gonna take with this money when it breaks down and you already in at the top and you're gonna start talking, you're gonna get your phone spinning around in your computer chair. Start talking about, yeah, I told y'all. Yeah. Get your wig knocked out. Goes the other way. Yep. Mm-hmm. Be all right. Yep. You know what, Tiffany? Yeah, gets the boys get smoked. They be that smoked salmon. You feel me? You on here, you probably close out with a 5% after you clearly see it's not going your way. You may get 5%. Turn that winner into a loser. Who knows? It happens. It happens to all of us. Yeah. thought that trade was gonna keep going to the moon. You said I can get more contracts. It's the got plenty to go. No, it don't. No, it don't. Let the trade break out, please. Just let the trade break out. Be at peace and be smooth. Okay, that's all I got to say. And on that note.